Welcome to the show. Let's talk to Connor Campbell, financial analyst at Spreadex. Morning to you, Connor.
Good morning.
Cable, you've kindly sent the chart. Great British Pound against US dollar. Key events: FOMC meeting minutes on Wednesday. US inflation and retail sales on Friday. What are the clients up to in this contract?
Yeah, it had a pretty decent Monday. I think basically predicated on the fact that there was no news. It struggled so much last week. Weak figures out of the UK, uncertainty around Theresa May's sort of sweaty grip on the Tory leadership. This over the weekend, there was infighting in the weekend papers as you'd expect, but nothing enough. It's sort of any plot to oust May did seem to lose steam over the weekend, and then with sort of Boris Johnson intervening yesterday in that leaked WhatsApp message to the Tory MPs group. The pound was sort of reassured enough that May should be, still in power by the end of the week. However, it's got, a few key hurdles to overcome this week. Today we've seen a decent-ish manufacturing production figure that was expected to fall from 0.5% to 0.2%, came in at 0.4%. That's fairly solid. Obviously, It's still falling month on month, but not as fast as forecast. In the rest of the week, sort of the attention shifts to the dollar, and that might be where the pound gets into some trouble, basically. You've got the Fed meeting minutes on Wednesday. They're likely to show, a fairly hawkish Fed. Investors will be sort of combing those minutes for details on whether it's a November hike, a December hike, or if it's going to be pushed into the new year. And then on Friday, probably the biggest event of the week, really, you've got the US inflation figures and the retail sales figures. Obviously, the US inflation repeatedly been highlighted by the Fed as sort of the key marker at the moment. If that increases any more, that's only going to push sort of Yellen and co further towards a rate hike. I think it's expected to jump from 0.4% to 0.6%, which will be its highest reading in a while. If it hits that figure, then the dollar could be in for a fairly sizable boost on Friday. Ditto retail sales, I think they're meant to jump from minus 0.2% to 1.5% month on month. Again, huge swing there. Sort of another hawkish figure following on from the figures we saw last Friday out of the US. And again, that's why I think our client's been selling just above that 131 mark. The pound might not fall too far, but with the attention sort of shifting towards the dollar in the second half of the week, there is a danger there that if the greenback gets a significant hawkish boost, then the pound could resume the fall that it saw last week.
Understood. Connor, thank you very much indeed.